Hey guys, this is RG and I'm back with another video. So today I'm bringing you an update to the 2020 crash portfolio. Keep in mind that this portfolio is made up of just some of the most speculative and risky stocks out there. Again, I wanted to document and chronicle the performance of these stocks. They're not necessarily recommendations. This is for entertainment purposes only, and please make your own independent choices when deciding to invest on any of these companies. Just because, once again, they are risky. This is a speculative portfolio, but today I wanted to bring you an update to this portfolio, and I wanted to show you how it's performed. On Monday, I did make a deposit of $100, and I wanted to kind of show you how the portfolio did. So typically, I think from week to week, I don't plan on getting into each specific allocation. However, I wanted to show you what the portfolio did because it was kind of a wild week. So let's get into the individual stocks. Let's see how each one of them performed. I want to show you kind of the biggest winners and the biggest losers for the week. So as you can see, it looks like Discover Financial was up 12%. Carnival was up about 12%. Wild week for Carnival. It was up at one point about 25%. Over that actually, and then ended up coming back down to about 11.5%. Capri Holdings up about 9%. Dave & Buster's is an interesting one. Feel free to let me know in the comments below whether your state is still, maybe state or county, whether your jurisdiction is still within a stay-at-home order. I'm in Southern California. A lot of these businesses are still technically closed right now. They're not really operational. It'll be interesting to see what happens once these locations open up. I think that if people begin to patronize them, these stocks have a potential of doing really well. Something tells me that they're not, though. I think that a lot of people are going to hesitate to rush into these types of locations. Keep in mind that at least here in Southern California, many of these locations are located within a lot of shopping malls, a lot of really crowded places, and Dave & Buster's in general is just a very crowded establishment. So it'll be interesting to see how they do as the year continues. EPD up about 7%. Delta, Tapestry, Boeing, all up over 5%. Now let's go into the biggest losers for the week. Royal Dutch Shell, they had an interesting week. I wanted to talk about them specifically. If you're a dividend investor and you had this stock in your portfolio, obviously you know what I'm talking about. Raytheon, this is actually one of the stocks that I really like in this portfolio, down about 5%. And then I had a JLL, a commercial property manager, down about 4%. And let's quickly go into some of these individual companies. So the first stock I wanted to talk about today was GM. Before the week got even started, they had already announced that they were planning on suspending their dividend and they're no longer going to be doing any stock buybacks. No surprise there. The company did have some liquidity issues. Balance sheet did not look great. They did indicate in another article that I was reading that they're trying to improve liquidity and they're trying to kind of fortify their cash position in order to have the balance sheet obviously get them to the other side. Keep in mind that a lot of these car manufacturers, especially the American ones, they seem to get hit especially hard during these recessions. This may be a bad recession for them. So if you're a dividend investor and you had this in your portfolio, let me know in the comments below. Did you keep it? Did you dump the company? My assumption is that most dividend investors probably weren't hanging on to this company, but nevertheless, feel free to let me know. The other company I wanted to talk about was ExxonMobil. This week they did come out with their quarterly earnings report, and they actually announced that they had their first quarterly earnings loss in over 20 years, I believe. Last time they had a quarterly loss was 1999. That was really no surprise with the state of the energy sector, especially when it comes to oil. Also, last month they actually tapped into the debt markets in an attempt to, I think, bolster their balance sheet so that they can continue to pay that dividend out. We'll see if they can keep it up. What does bother me about this company is that they are tapping into the debt markets just to pay that dividend, it looks like to me. Another thing that they did is they did cut back on their CapEx, which is probably a smart thing at this point. They did have a considerable cut, about a 30% reduction in CapEx for 2020. The other company I wanted to talk about was Royal Dutch Shell. Really interesting week this week again. They had their quarterly earnings report. While a lot of the other oil companies decided to preserve their dividend, I believe it was ExxonMobil, BP, and Chevron, this company actually decided to slash its dividend. And I believe it's down to about 3.9%. Again, let me know if you're a dividend investor and whether you have this in your portfolio. Are you dumping it? Are you keeping it? Also, keep in mind that a lot of the metric data within M1 Finance is oftentimes outdated. This here is indicating that their dividend was 12.61%. It's not accurate. Again, they did slash their dividend. Something to keep in mind is that this is the first time since World War II that the company has actually slashed its dividend, and it slashed it by by 2/3 basically. It's down to about 3.9% as part of this move. Similarly to some of the other oil stocks, they're no longer doing stock buybacks, but the big difference here is that Royal Dutch Shell decided to slash its dividend. So it's something to keep in mind. Again, let me know if you're a dividend investor, whether you're keeping this one or dumping it. It was always a risky and a speculative stock. Again, it's interesting just because a lot of the oil stocks, they really pride themselves on paying out that dividend. It's the only reason why a lot of people have them in their portfolios, and at this point, this company's cutting it back considerably. I feel that this company is doing whatever it has to do in order to preserve the health of the balance sheet. And I think that that comes before paying out a dividend, personally. I think that ExxonMobil is still going to have a tough go. I may actually increase my position of the stock and decrease the position of on Exxon just because of that. I actually care more about the balance sheet than I do about the dividend. So that's just me. Let me know what you guys think. ExxonMobil, BP, Chevron still paying out the dividend regardless, and Royal Dutch Shell decided to slash it by 2/3. Last stock I want to talk about today was Boeing, ticker symbol BA. Another interesting week, lots of headlines for this one. So for those of you who may not know, Boeing has had the last 18 or 20 months have been really rough. They had 2 crashes of their 737, which resulted in that specific aircraft getting grounded, which has adversely impacted their revenue, their earnings. Currently, their balance sheet is kind of a nightmare. My main concern with the bailout was under what terms. So what a lot of people may not know is that usually when you secure a government bailout, the terms associated with the bailout are not always that generous, or they may not be all that attractive. But actually, Boeing was able to secure private funding. And so at this point, I believe that their last day to submit an application to secure government funding or to secure a bailout was on Friday. So today is Saturday, actually. So that deadline has passed, and it looks like they won't be getting any type of government bailout or government funding. So they were able to secure, it looks like they're going to be getting about $25 billion from the debt markets while still maintaining their investment grade credit rating, which means that they're going to be able to get relatively low rates associated with a lot of that debt. They're going to be paying anywhere between 4.5% and 5.9% on those bonds. So overall, it's a pretty favorable turnout, I think, for them. Nevertheless, it's $25 billion of additional debt that they're going to have on the balance sheet, which I think a lot of people may not be all that excited about that. I think that this company still has a long way to go. Nevertheless, I think in the short run, they've secured funding, they have liquidity, they're going to be able to get past this crisis that they're currently going through. So I think at this point, the company has overcome a lot of the hurdles that it needed to overcome in order to make it to the other side. The next step is to find a way to get the 737 up and running, and if they're able to do that, I think that they're going to do relatively well. So before I wrap this one up, I quickly wanted to just touch on the Berkshire Hathaway annual meeting. It just concluded, actually, and I thought that Warren Buffett said a few very interesting things. One of the things he touched on was the fact that he's basically very bearish on office and retail space. I have to agree with him there. I think that commercial real estate is going to be the one thing that may not come back anytime soon. The second thing that I thought he said that was interesting was the fact that Berkshire really didn't deploy any type of capital as part of the stock market decline, which, to be honest, I was shocked. What that leads me to believe is that even though the stock market crashed by as much as 34%, he didn't really see a lot of great opportunities or a lot of buying opportunities. Also, he did release something. He had a few simple slides, but he showed that basically he was a net seller of stocks in April. So again, that should tell you something. And the last thing, which is related to this, was the fact that overall he's sold his entire position within the airline industry. I think that that's huge. It's not really a surprise to me because of what he did last month. For those of you who don't know, he ended up selling stakes in a couple of the airlines. Most people didn't know what that meant. Some people thought that it was just him trying to get under that 10% threshold. Once you get down below that 10% threshold, you no longer have to report to the SEC. However, it was more than just that, obviously, and this doesn't surprise me. He seemed to, again, indicate his usual message, very bullish on America, but he was very bearish on the airline industry. I do have 2 airline positions within that portfolio. I don't intend on really changing them. It's going to be really interesting to see what happens this upcoming week, just because I think that these stocks are probably going to tumble. So that's going to wrap it up for this one. Overall, the 2020 crash portfolio was up 2.23% after 1 week of performance. I will be continuing to deposit $100 every week to see how it performs, and we'll see how it does. Right now, I think there is something to keep in mind is that there is a very significant decoupling between the stock market and the real economy. The unemployment figures this week came out, and we have almost 30 million people who are unemployed, yet on this incredibly risky portfolio, I'm up 2.23%, which doesn't make a lot of sense to me. Keep in mind that on some of these companies, I have returns that are 12, 11, 9%, and I've only had this portfolio for a week. So it seems to be that there is a disconnect between stock market and the real market, thanks to the Fed, I'm sure, and we'll see how it does. I expect there to still be a retest of the mid-March lows within the stock market. This portfolio will get absolutely decimated. Those are my thoughts. Again, I'm no financial or stock market expert, so please feel free to do your own research whenever you make an acquisition or decide to invest in a company. But let me know what your thoughts are. That's another thing that's really interesting right now is, do you think that we're going to retest the mid-March lows, or do you think that this is a legitimate recovery? I think that stocks have nowhere to go but down from here on out. Nevertheless, I will be putting money into this portfolio. Don't be surprised if all of a sudden one of these weeks it's down 30%, because I think if volatility returns, I think that's definitely a possibility. But that's going to do it for this one. If you liked it, feel free to hit the like button, subscribe if you will, and I'll see you guys on the next one.